Global markets entered the final week of November with a mixture of relief and anxiety. In the United States, retail spending, technology stocks, aviation operations, and corporate strategy all offered signals about the underlying strength of the world's largest economy. Beyond America, governments wrestled with budgets, airlines scrambled to keep fleets flying, and energy and mining firms repositioned for the future. Here's a detailed look at the most important business developments around the world this week. Nvidia falls as Meta considers Google's AI chips. Tech stocks managed to stabilize after several volatile weeks, helped by rising expectations that the U.S. Federal Reserve will begin cutting interest rates in December. The Nasdaq 100 gained about 5% since November 20th, reversing part of an earlier slide triggered by concerns about slowing demand and elevated borrowing costs. Yet the sector's partial recovery did not extend to Nvidia, whose shares fell sharply following reports that Meta may be exploring the use of Google-designed AI chips as an alternative to Nvidia's industry-leading accelerators. The development fueled investor fears that Nvidia's most important customers may be seeking to diversify supply, especially as competition in the AI chip market intensifies. Nvidia lost more than $100 billion in market value in a single session and is now down 13% from its peak. AMD also slipped, while Alphabet shares climbed on speculation that Google's custom chips could see broader adoption among hyperscale clients. U.S. Black Friday online sales hit $8.6 billion. U.S. consumers spent an estimated $8.6 billion online during Black Friday, marking a 9.4% increase compared with last year, according to Adobe Analytics. The rise reflects a continuing shift toward e-commerce as shoppers sought to avoid crowded stores and cold weather during the key holiday shopping weekend. Retailers offered more aggressive early season discounts this year as they worked to clear surplus inventory and respond to cautious household budgets strained by higher interest rates. Electronics, especially laptops and mobile devices, were among the most popular categories. Adobe's data, drawn from more than 1 trillion U.S. retail site visits, suggests that despite cost of living pressures, consumers remain willing to spend when presented with steep promotional activity. Analysts warn, however, that heavy reliance on discounting could squeeze retailer margins during the remainder of the holiday season. Global airlines rush to fix. Airbus A320 glitch airlines across Asia, Europe, and the United States raced to repair a software glitch affecting Airbus A320 jets after regulators ordered immediate corrective action. The recall triggered hundreds of flight delays, particularly in Asia and Europe, where many carriers grounded affected jets overnight while implementing the required fixes. Several airlines, including American Airlines, United Airlines, Air India, Delta, Wizz Air, and AirAsia, reported completing repairs within 24 to 48 hours, avoiding widespread disruption during the busy travel period. The issue, which affects more than 6,000 aircraft worldwide, involved reverting to a previous version of software responsible for stabilizing nose-angle calculations, and in some cases required hardware changes to older jets. The rapid industry-wide response prevented a worst-case scenario, though analysts noted that the unexpected grounding highlighted ongoing pressures on airline maintenance capacity amid global labor and parts shortages. Airbus apologized for the disruption and continues to investigate a related incident involving a JetBlue aircraft earlier in the year. Apple's CEO succession planning gains momentum. Apple's long-term leadership transition moved into sharper focus as analysts reported intensifying internal discussions about succession planning for CEO Tim Cook, now 65. JP Morgan analysts said the company is preparing a carefully managed handover aimed at ensuring operational continuity after more than a decade of strong financial performance. John Ternus, Apple's senior vice president of hardware engineering, is widely viewed as the leading internal candidate. Ternus has overseen development across multiple product lines and played a key role in the shift to Apple Silicon. Analysts expect a gradual reshuffle of Apple's broader leadership over the next several years, with Cook potentially moving into a chairman role. Under his tenure, Apple's market capitalization has risen from under $400 billion to nearly $4 trillion, making the succession one of the most closely watched transitions in corporate America. Nuclear energy investments surge as AI drives power demand. Investors are increasingly betting on nuclear power to support the rising energy needs of artificial intelligence data centers. X-Energy, a U.S. company backed by Amazon, raised $700 million to build nearly 150 small modular reactors across the United States and Britain. Rivals Valar Atomics and Allo Atomics also secured fresh financing, reflecting growing confidence in advanced nuclear reactor technology. Advocates argue that small modular reactors offer a reliable, low-emission alternative to fossil fuel power plants, particularly as AI-related electricity consumption accelerates at a pace that renewable sources alone may struggle to meet. Still, the sector faces regulatory hurdles and substantial capital requirements. Analysts caution that many projects must demonstrate commercial viability before large-scale deployment becomes feasible. Novo Nordisk's Alzheimer's drug fails trial. Eli Lilly reaches $1 trillion valuation. Novo Nordisk reported that a promising Alzheimer's treatment, already used as a diabetes drug, failed a late-stage clinical trial, sending the company's shares lower and extending a months-long slide. The setback highlights the scientific and regulatory challenges facing pharmaceutical firms seeking breakthroughs in neurological diseases. Meanwhile, rival Eli Lilly became the first healthcare company ever to surpass a $1 trillion market capitalization, bolstered by robust demand for its own weight loss and diabetes medications. Lilly's rapid ascent underscores shifting investor sentiment towards firms with proven commercial success in chronic disease treatments, even as competition in the obesity drug category intensifies. While U.S. markets dominated much of the week's attention, developments abroad also shaped the global economic landscape. From budget battles in Europe to shifting power dynamics in mining, aviation, and artificial intelligence, international markets showed both resilience and strain. UK and France struggle with budget tensions. Britain's Chancellor Rachel Reeves presented her second budget, outlining plans to increase annual spending by £11 billion and raise taxes by £26 billion by the end of the decade. The package front-loads public expenditure increases while phasing in tax measures gradually, meaning government borrowing will rise more than previously anticipated. Despite concerns about the UK's rising welfare bill and long-term fiscal sustainability, markets reacted positively. Gilt yields, especially on long-dated bonds, fell and sterling strengthened. In contrast, France continues to grapple with political instability. The National Assembly rejected key elements of Prime Minister Sébastien Lecornu's budget proposal, echoing the difficulties faced by his two predecessors, both of whom lost their positions after failing to pass budgets. The impasse underscores France's persistent struggle to reconcile fiscal discipline with public demands for social spending amid weak economic growth. IMF approves $8.2 billion support program for Ukraine. The International Monetary Fund approved a new four-year, $8.2 billion funding program for Ukraine aimed at stabilizing its war-strained economy. The package is designed to support government operations, maintain essential public services, and help cover the escalating financial burden of the country's defense against Russia. Ukrainian officials hope the IMF's endorsement will encourage broader financial support from international partners, many of whom have faced political obstacles to committing new funds. The IMF emphasized that the country's economy remains fragile, but noted signs of resilience in fiscal reforms and revenue collection. The latest program will be dispersed in stages, contingent on Ukraine meeting various structural and governance targets. Analysts warn, however, that without substantial additional assistance from allied governments, Ukraine may struggle to plug its widening budget gap next year. Bitcoin sell-off deepens as crypto firms liquidate holdings. Bitcoin's price has dropped 27% since October, extending a broad sell-off driven by risk-averse sentiment and profit-taking following the cryptocurrency's earlier rally. The downturn has hit crypto treasury firms particularly hard. These companies hold digital assets to give shareholders exposure to token markets, and many have suffered even steeper losses. Several have reportedly begun selling their reserves to shore up liquidity, raising concerns about a self-reinforcing downward cycle in which forced sales push prices even lower. The slump underscores the heightened volatility of digital assets at a time when institutional demand remains inconsistent and regulatory scrutiny is intensifying across the US and Europe. Analysts say Bitcoin's trajectory will likely depend on broader macroeconomic conditions and whether financial market stress encourages further deleveraging among crypto-related firms. CoinShares scraps multiple crypto ETFs ahead of U.S. listing. Crypto asset manager CoinShares withdrew plans to launch 3 U.S. exchange-traded funds, covering XRP, Solana staking, and Litecoin, just months before its expected NASDAQ listing. The firm also announced it would wind down its leveraged Bitcoin futures ETF, citing intensified competition and narrowing margins as the U.S. crypto ETP market consolidates around larger, better capitalized players. CoinShares CEO said the firm is adopting a different playbook, focusing on higher-yielding products, including crypto equity exposure, thematic baskets, and actively managed strategies mixing crypto with traditional assets. The shift comes as CoinShares prepares to go public via a $1.2 billion SPAC merger. The company, which manages around $10 billion in assets, has been expanding its footprint across Europe and North America, positioning itself to compete in a market where regulatory barriers and product differentiation remain significant challenges. Volkswagen expands EV production in China. Volkswagen announced that it can now manufacture electric vehicles entirely within China, taking advantage of production costs that are roughly 50% lower than in Germany for some models. The move reflects the company's long-term strategy to reinforce its position in the world's largest EV market while reducing reliance on European production lines, challenged by high labor costs and slowing demand. VW plans to introduce about 30 new EV models in China over the next 5 years, targeting both mass market and premium segments. Meanwhile, efforts to cut 35,000 jobs in Germany have slowed, as fewer employees than expected have opted for voluntary departures. Analysts say VW's China-focused strategy could strengthen its competitiveness against domestic champions such as BYD, though geopolitical tensions and rising protectionism may complicate future expansion. Mining shakeup. Anglo American to merge with Teck Resources. BHP abandoned its renewed takeover attempt for Anglo American, ending an 18-month pursuit that the smaller miner repeatedly resisted. Instead, Anglo announced a merger with Canada's Teck Resources, a deal that will create one of the world's top 5 copper producers. The combined company will control adjacent copper mines in Chile, allowing for operational synergies at a time when global copper demand is expected to surge due to the energy transition. Analysts say the partnership strengthens both companies' strategic positions while avoiding the integration risks associated with a hostile takeover. For BHP, the withdrawal marks a rare setback, though the firm may now pursue alternative acquisitions as it seeks to expand its copper portfolio. China overtakes U.S. in open-source AI model adoption. A study by the Massachusetts Institute of Technology found that Chinese open-source AI models now account for 17% of global downloads, outpacing American models at 16%. The shift reflects China's growing influence in the open-source AI ecosystem, particularly for models that can be freely downloaded, modified, and deployed for commercial or research use. Chinese developers have been increasingly aggressive in releasing powerful, low-cost models aimed at startups and independent researchers. The trend highlights intensifying global competition in AI development as open-source approaches allow smaller firms to adopt advanced capabilities without relying on large U.S. tech platforms. Analysts say the widening adoption of Chinese models may raise new regulatory and cybersecurity considerations in Western markets. The week's developments underline an increasingly complex global economy marked by technological rivalry, shifting political priorities, and growing pressure on both public finances and corporate strategies. From the resilience of U.S. retail demand to Europe's budgetary strains and Asia's industrial evolution, markets continue to adjust to a world shaped by competition, uncertainty, and rapid innovation. We will continue tracking the stories that define the global economy as 2025 draws to a close.